Welcome back to the Building Bigger Lives podcast. I'm Kathryn Pedersen. And this week, with my wonderful co host, Michael Regan, we're going to talk through some client touch points. This week, I had an insurance agent that I had recently done a loan for send me an email and say, hey, that part of your process was really great, how you reached out and did this and did that. Can you kind of tell me what systems you're using? And I thought, oh, yeah, maybe that is kind of unique. And welcome, Michael.
Yeah, great to be with you as always. This one intrigues me, Kathryn, because it's a personal inspiration, and I like an episode like that every once in a while where you've experienced something in your normal interaction with your client or with your partner, and it drew you to want to talk about it. So I'm excited to hear you unpack this topic because when you and I've sat together in roundtables before, I like to draw out the full cycle of the loan production process. And a lot of what you teed up here falls into my fourth quadrant, which is how we manage that post-closing experience and the systems we create and the follow-up process that we follow with our clients throughout the life of that relationship. So I'm excited to hear from you. So maybe rewind that tape a little bit. I know you hit it at a high level in the intro, but what's the scenario that really inspired today's episode?
Yeah, so there's certain touch points that we have throughout the process. And what he was specifically asking about is we had sent out an experience.com. I'll just bring up the name of the company, give them a little shout out. Request for a review. He had given us an amazing review. So, of course, I sent a thank you letter that came from a thank you note like system that we use. And so between all those, he was like, huh, holy cow. But we had also stayed in touch with him throughout. So I think we can talk through kind of all of those. But I think he was like, well, shoot, maybe we can use this here. What does that look like? And how do we get that implemented? So I tried to write him a pretty sizable email about it just to say, hey, here's some things we do. Yeah, you can absolutely steal what we do. It's easy to implement, but it made me think like, oh yeah, I've implemented things throughout the years and you kind of forget that you've implemented them in these little parts, but they're really easy things to insert into the process that can help us now that things are busier. We don't want to lose that personal touch. So it's a way to add personal touch to the process when you are busy that still makes people feel cared about.
Okay, so immediately you're getting the old coach's wheel turning here because in my mind, I see a lot of what we're discussing at the tactical level, but I know all tactics are driven by a strategy, and most strategies are ultimately driven by a vision. So at the top of the funnel is vision. Describe for me just how you see this, because this might help our audience think about this a little bit as well, and we'll use you as the beta test for this particular exercise. When you're thinking about all those things that you're attempting to manage at a tactical level, talk to me about the strategy, talk to me about the vision. What's your long-term vision of that post-closing experience with both partners and with customers? Describe that for our audience.
Well, I think it even goes before the post closing because I think that there's little things that we do throughout that if you stay consistent, then it lines up post closing with what you were doing during the process. Because I think there's a lot of people who are really good at the process and then they forget about post closing, but it's easy to carry that forward and it does set the stage for that. So I think they're both kind of go hand in hand. But I think the overall thought in my brain is I really want my clients to feel like we appreciate them. We're here to help, not only for the transaction, but going forward. And adding those touch points throughout so that they don't forget about us. And if, I don't know, there was this one commercial or something where someone asked on the street, hey, who's your real estate agent? And most couldn't name them. And I forget where I even heard this from. And I thought, I don't ever want to be that person who says, I can't actually remember the name of my mortgage lender. I don't want people to be in that situation. So I want them to think of it as a good experience and remember my name so that when they are ready to do something down the road, they know how to get a hold of me.
Do you think most real estate professionals and mortgage lenders think like you think? Is that, I mean, everybody would say they would want customers to come back to them, but are they willing to put the effort into making sure that they don't forget about them, making sure that they cross associate that feeling or that maybe opportunity with, oh, yeah, I should probably give Kathryn a call? are you alone in this? Are you in the minority of this, or do most folks in your profession think this way?
It's so hard. That's probably a better question for me to ask you, but I mean, I hope people think about this in parts. It's just getting it implemented that's the hardest part. And I think that's what we can talk through is that strategy for doing that. I think there's a lot of people that have some parts of it. It's just what does the whole look like and what other things can they refine to make it a little more seamless and maybe a little less effort so that if they get busy, those things are still happening regardless of volume.
Yeah. Well, I'll certainly tell you from my point of view, we live in a world where most of the folks we rub shoulders with are in that space where they end up being in the Scotsman's Guide top performers, or they're running divisions of people that have those groups. So a lot of us probably fall into that very small percentage of people that actually are very thoughtful of this and are very proactive of this.
Mhm.
But the overall industry, I got to tell you, they're just fine if the database allows them to automate some sort of, I just got them for my birthday. I got these really poor automated emails, from my dentist, from the chiropractor. It's well intended. Don't get me wrong, but it's clearly an automated email. It's clear. It doesn't. It, it in some ways produces the opposite effect of their intention. When you message me
Mhm.
directly on my birthday, that feels important and personal. When I get an automated email from your drip campaign, it just doesn't feel that way. And I think that's where the majority of the industry plays. They're happy to let their database, they think a CRM, which is a client relationship manager, they think
Mhm.
the automation and email delivery system is effective, good enough, plenty. And I think that's maybe one of the reasons why the folks that are in the Scotsman's Guide tend to separate is they're willing to do what you do and put in a little more effort, to where, as you were saying, we're planting those seeds very early in the process because we're already setting up that expectation early in the process because we
Mhm.
care and we want them to know that early in the process. So none of this is a surprise 3 months, 6 months, years down the road. It's you just delivering on exactly what you said you would do.
Mhm. Absolutely. No, I think that is very true. But I also think I really don't want it to be overwhelming for people and for people to dismiss it as only the people in the top 1% have the time to figure that out or the money to figure that out. This is one of the ways that we got to this point. We implemented this back when we were lower producers because you kind of have to if you can look ahead and say, hey, when I get busy, I'm not going to have the time to do certain things. What systems can I implement now to help this be consistent as we grow?
Well, I hope our audience heard that. That was really, really plain, clear, and important because the truth is, you're right. You guys were the hungry, up and coming group of people 10 years ago, and you were willing to do whatever it took to get there. And when these kind of, let's call them technologies or platforms that you could plug into and leverage, um, were part of the success formula, you embraced them. And did it cost you some money? Yes. Did you have to figure it out? Also, yes. Was it worth it? Once again, yes.
Mm.
Uh, I really like that perspective because you're right. These aren't things to implement when you get to the top. There's sometimes the tools that it takes to get there. So good job. Once again, humble Kathryn Pedersen, hungry, humble, smart, the ideal team player. We'll unpack that book sometime. That's a great one. Um, Listen, Kathryn, if we think about this in the context of I don't know, different relationships. You and I come from the housing industry. So whether we're on the real estate side or the lending side, most folks tend to think, yeah, I'll reach out to you when I need to buy a house. Or maybe in the rare case that the market conditions are so obvious to them that they think, is this a good time to refinance the mortgage that I have? Um, but you and I've learned along the way that real life is constantly moving and evolving. And if we're not
Mhm.
in front of those folks, there's not really a good reason for them to just be automatically thinking of us. And so that's very motivating to people like you and I to stay in front of them. But talk to the audience about that a little bit because I'm sure somebody's out there saying, yeah, I could do all that, but who wants to hear from their lender when you can't lower their rate? And to me, that makes me sad because that's only one reason to call them. You see
Mhm.
it differently. Talk to the audience about that.
Yeah, so we like to reach out at certain points. So one of them is with that first payment, just to make sure they got everything, because that's the scariest part for really everybody, buyer or refinancing client. And then 3 months, just to make sure everything's good and set up. 6 months, 12 months, 24 months, at least those. So, because those are kind of the times when things come up. Like you get your escrows, great. Let's answer those questions and preempt that. And I'll have people who are like, I have been saving this question for 2 months. And I'm like, oh, you don't need to do that. But they're excited for that meeting and they're ready to go. So it shows you that it's needed. If someone doesn't want to schedule it, that's okay. I'm not going to fight them about that. But we do get great information at that point, and we can really just touch them again because we really spent a month really, really close. And now all of a sudden you close and you don't see them. So it's a good time just to reconnect, make sure that relationship's solid, ask them some strong questions, and also they'll have questions for us. So it's a good time to do that. And but you have to set that up. So I remember a coaching call that I had with you that was like, okay, great. So I'm sitting at annual reviews, but no one's planning it. It's like, okay, great. Let's talk about the setup of that. And I think we could probably have a whole another podcast on annual reviews, but it's in the setup of, hey, by the way, at closing, I'm telling them we're going to call you at 12 months and set up an annual review. We'll also check in with you at these points, but expect an appointment link to come through at a year. We mentioned it at 6 months. Hey, in 6 months, we're going to be reaching out about an annual review. So now we have more people who schedule those because we've set it up correctly. So some of it is just working on the scripting and then adjusting it. We've done it wrong and had to fix it over the years, and that's okay.
So let's dig into that topic of setting it up correctly, because you're right. We can maybe pick up on a different episode and talk about the actual execution of the follow through at 12 months.
Mhm.
But I think somewhere within the first 12 minutes of the referral, we're beginning to set that up, but we're doing it subtly. You and I come from an era in which, a loan application was something we might have done in person. It might have been something that we did over the phone. It wasn't necessarily a online application when we started. And while I love the efficiency of that as an originator and many of the other modern efficiencies that we benefit from, the truth is we got to ask some really important questions
Mhm.
when we were sitting across the table from someone, or at least on the phone with them. I guess today that'd be on a Zoom. And when we get to ask those questions, we can explore some of the topics that are outside of the 1003, or for those of you listening, our standard form for the loan application. If we're asking some of those questions, we don't necessarily have to have solutions for those. We don't even necessarily have to have a conversation around those, but we can mark those as topics that we want to bring back up because the way they reacted or responded told us, that's probably something. Give an
Mhm.
example to our audience where you've practiced this art of asking really great questions in that initial interview that allow you to set up what you'll follow up with 6 months, 12 months, 2 years down the road. What are some questions you've enjoyed learning about with your clients?
Yeah, so one of them is you can kind of tell when someone's nervous about the rates and they know rates are higher now than they were. And so if I can sense that and we're talking through rate stuff, I always say, hey, one of the services that we provide post closing is we send out a mortgage coach with a trigger rate showing where it's going to make sense for you to refinance. And then we set that trigger rate in our system and we reach out when it hits that point, because then they're not worried about it and they actually push back less on some of that stuff because they know that they're going to get that as a service that might be different than other things. And so it takes off some pressure at that moment. So
Mm.
there's little things that you can do that just say, hey, this is kind of some other stuff that's out here that we want to bring up at that initial call. And then we'll have people who decide to use us because we've already talked about that and they don't think that they get it somewhere else. We've talked once about how an agent lost a listing because they the client said, well, this agent listed in the MLS and you didn't say that. And the agent was like, oh, well, of course I do that. But they hadn't brought it up. So guess what? The client was like, well, you don't list it in the MLS, so I'm using the other agent. So we sometimes forget to point out the obvious. So those are good things to bring up at the initial call.
Another one that I'm sure comes up pretty quickly, if not initially on that call, maybe at the very next step when they're ready to make the move of completing the formality of the application. At some point, you have to pull their credit. And I know as an educator, you speak a lot to your education audiences around the importance of not just the credit score, which is really very headline. You help them understand how the credit report works, how the agencies report, how the vendors that supply the information to them work, and ultimately how, as an end user, you have a lot more control over the way your score works. Do you get, share with our audience how you bring up topics around credit? Because gosh, what a great tool you have once you have their credit report to learn about the way they manage money.
Yeah, so we do something maybe a little bit different where we have a homework sheet that if somebody has credit that maybe is a little challenged or maybe not as high as they would like it to be, or they're trying to step up a little bit in their approval, we kind of go through some credit homework and get that out to them, which is a piece of paper that kind of shows them exactly what to do. That also helps us because later we can look at it and say, okay, great, how are you coming on that homework that we went through together? Because then it's fascinating to see there's people who just hit all those items and there's people that don't, and it really distinguishes who's going to work to get that themselves into a house. So there's definitely those little parts that I think a lot of people don't do and don't even know that people do or don't. So that's can help also with making sure agents kind of know what we're doing, even if their client doesn't qualify today. So that, I would definitely call that a high touch point.
Yeah, for sure. Because I think whether we like it or not, the credit bureaus, the reporting, the scoring, all of that stuff is very anxiety inducing for the average
Hmm.
client. Unless they just happen to have an 800 credit score, they're probably, I mean, it's amazing how many people you meet with a 700 credit score who have anxiety because they think, why can't it be 720? Why can't it be
Hmm.
740? They feel stressed about it because they don't totally understand how does this crazy system work, and basically how do I manage it? And so I would imagine those are great topics for follow-up for you. So I'm glad you previewed a few of those. I remember one that I used to love was it was normal, maybe a little later in the conversation, but still ahead of closing. We'd want to talk about insurance for the property. It was a great opportunity to introduce a partner and make sure that the property is not only
Hmm.
properly insured to meet the underwriting standards, but it gave me a chance to say, oh, while we're on the topic, have you tell me about your income insurance? And that was always an odd question for people. Like, wait, income insurance? You mean like life insurance? Like if I die? Well, that would be the ultimate version of it. But have you reviewed your short term or your long term disability insurance in case an event would happen that would temporarily cause some stress on your family if your mortgage was due, but your income got disrupted? Well, no, I've never thought about that. Or oh yeah, well, I think my work provides some of that, but I don't even. It's a great topic because again, it's another seed we can plant to say, look, that's not critical to the completion of our mortgage loan process, but I actually care about my customers. And to me, while the underwriter just needs to clear the coverage that ultimately makes sure that the lender isn't going to get left high and dry in a catastrophic
Hmm.
event, I actually care about you. I want to make sure you and your family aren't going to be high and dry in a catastrophic event. So let's make sure we come back around and talk about those. So when we get to those, maybe 60 or 90-day check-ins, I think the 31 is totally appropriate, as you said, for the first payment. But this gives us a chance to come back around and say, hey, by the way, this was a topic that we put a pin in, and I'd love to spend some time with you on that. Because good news, I don't sell that. So I'm not here to sell anything. I want to make sure you get what you need. And guess what topic I get to bring up then too? While we're here, have you reviewed your will and your trust? Again, it's a common topic that people just don't think about until someone asks them. And usually the answer is, oh, yeah, we haven't looked at that in years. We probably should update that. And by the way, good time to think about putting the home you just financed into a trust as a layer of protection. All topics. So when people tell me, gosh, what would we talk about if we followed up? I think 100 things, and you
Yeah.
just have to care.
Totally. It's so true. One other good question to bring up at the initial appointment is what are your worries? Like let's talk through. I want to make sure when you leave here that you're able to sleep tonight. So let's talk through the things that have been keeping you up in advance of this appointment. It might be what's great is we can flush stuff right away of, hey, we're nervous about credit. Great, let's look at that first. Hey, we're nervous because I just switched jobs. Great. Tell me what you did. Let's talk through that right now. So we just flush that stuff. But then that also helps us lead into other stuff of, hey, when you bought, your score was this, but I know you still had a goal of getting your credit score higher. How's that doing now, even though you purchased, so that when we refi, you're ready to go? So some of those things you can circle back to if you keep good enough notes on your clients and you know kind of what you're doing with all that.
So many more things we could talk about. I love this
Yeah.
topic because, I was being a little bit exaggerating when I said 100 more things, but it's probably dozens of more things.
Yeah.
And I think all I hope our audience picks up today, and I'm really glad you brought this one to our attention, is I think it comes from a genesis of you have to actually care. You have to care because it takes a little more time. You have to be a little more curious. You have to be willing to handle a question back to you because maybe they weren't expecting it. And you have to be prepared to have a good answer for that, or even to acknowledge, I don't really know the answer to that, but I'd love to find out. These are things that if a lender and a realtor could embrace as part of their standard operating procedure, I'm convinced, Kathryn, this is still, it's not new, but it's the kind of thing that if someone's worried that the AI automated world is coming to take over their job, spend time in these spaces. These are the places where people want to work through these topics with another real person. Even if the AI could ask the same question, guess what? The data says they're not ready to just go down that road. They still want to have that conversation with Kathryn Pedersen. And so
Hmm.
that opportunity you have to do that follow up is great. All this branched out of an interaction you had with your insurance agent. Was that correct?
Hmm.
And they just asked about your systems and your process you're following. I know we're talking about a lot of things that are ancillary to that, but let's maybe bring this one to a close going back to the systems and the process itself, because I don't want to lose that part of the topic. Most people get overwhelmed by bright, shiny objects. There's too many systems, there's too many
Yeah.
resources. What advice would you give someone listening today who's thinking, okay, I do need to upgrade from my current level of just put the info in the database and hope that my automated birthday campaign keeps in touch? What would you advise them to think about to move in a direction like you experienced with that insurance agent?
Yeah, I would say pick one or two things. So it could be, hey, after a meeting, I'm going to make sure a nice to meet you card goes out. And here's how I can do that. I can tag the receptionist. I can tag my sister-in-law that's helping me. I can just sit down and do it and write out the card and bring it home.
Mm,
So pick one thing like that to add. And maybe it's that you have just a checklist at closing. I used to have one that every time I went to a closing, I would bring it. I would say, hey, here's the things I have to go through with you. And just adding that in made me
mm,
accountable later to other things. So you can add something really small that
mm.
can make a difference. And it's not going to take a lot of work to put either one of those things in place, but there's 100 ideas. If you just add even one of those a quarter, it's amazing how after a few years, how many things you've implemented into your business to touch people.
Yeah, really, really well said. I mean, if we really took, that's kind of like back to our atomic habits quote.
Mhm.
If we just make that decision to be 1% better each and every day over the course of time, over 365 days, that's a real mathematical multiplication factor. And so that's the attitude you're taking, is you don't have to embrace all this stuff. Pick one thing a quarter you're going to implement, and just keep implementing. Like, basically
Mhm.
never stop learning, never stop innovating. And if we can embrace that attitude, I don't think we really ever risk being passed by other performers, or certainly technology, because most other performers and most technology is built on the status quo. So just don't get stuck in your thinking. Keep growing, and
Mhm.
and you'll have the opportunity to really leverage these things at a pace you can handle and not get overwhelmed. I like that advice a lot. Well, Kathryn, I'm really glad you shared the story. I hope our audience picked up a few things. Again, I highlighted that, at a high level, there's vision. At some level, that leads you to strategy, and ultimately to that tactical execution. So, depending on where you felt like that's a missing gap, you'll find some previous episodes of Building Bigger Lives, and I hope you'll go back and review one of those, and we can dig into the vision or the strategy or the tactics that you need. But, Kathryn, thanks today for bringing this one to our attention. I really enjoyed hearing how you have implemented some really great systems with your clients and your partners.
Yeah, absolutely. And it hasn't been overnight. So be patient with yourself and just move ahead. All right. Well, thanks so much for joining us today on Building Bigger Lives. You can find us on a lot of platforms. Please like, please share, please listen next week. We have an episode dropping every Wednesday. Thanks so much for listening.